Good afternoon, everybody, and welcome to the first session on the Wavy Tunnel. Today we're going to talk about trend following trades, but before we do, I just want to go to the forum and answer some questions there, talk about a few posts that you have been doing, and that's great. I'm so glad that you've been, some of you have been participating a lot, and the more you participate, the more you're going to get out of this. So the first thing that I wanted to show you was a way to start your wave counts. Now, obviously, the more data we have to start a wave count, the better. So I'm going to show you what to do in starting your wave counts. Naturally, we tell you to go to the monthly chart, but sometimes the monthly chart only has data going back to 2005. The foreign exchange markets and the other, well, all of the markets started trading well before 2005. So this is how we're going to find the data. We're going to go to TradingView. TradingView is a free charting service. If you want to pay for it, then it enables you to have more than one chart on a page. I mean, there are, you can pay for it, and it's an annual fee. I'm not sure what it is, but you can get data on TradingView charts. You can also get long-term data on other websites like netvania.com as well as DailyFX. Now, the DailyFX data comes from TradingView. But so I'm just going to show you TradingView. Now, what I've done is I'm just typing in. You can see that this data goes back to 1972. And I've taken the Forex ICE data. So the ICE data seems to be updated back to 1972. I started trading, by the way, in 1980. So I started to trade at this point in the pound cycle. Okay, and I was actually the British pound trader for the bank in New York. So we start by looking at the monthly chart, going back to as far as we can go. Then we can look at Juan's monthly charts and see how he has started his counts, because he's obviously looked at the longer term charts to start his wave counts. And if what I think he has done is he has labeled this an A, a B, and a C. Okay, so I think when you look at his monthly charts, we would see a wave C here. But let's go and have a look ourselves. We'll go on to the Elliott Wave desk, to weekly and monthly charts. And then we're going to click on continue reading, go to the pound. And yes, so he would have started, this as a C, A, B, C. Let's see where he would have started this, January 2005. So let's go back to the long-term charts. January 2005 would be right here. Right, okay. So A, B, C. All right, he started this as an A, B, C. This is a three-wave move up. And then he continues from there. Right. Another A, B, C. So that's how you can start as well. You can go back and look at the longer term charts. We can pull up the euro as well. The data here also goes back to 1972. And of course, it wasn't called the euro back in 1972. It was called the Deutschmark. So the Deutschmark switched over to the euro, but it's a seamless transition, a seamless move. Now, I'm not sure how far back the crosses will go, some of these crosses, so you'll have to decide yourselves when you look at a wave count. Are there any questions here? Does that make sense? So always start with the longer term data, and TradingView has it. But if we go to DailyFX, they have it as well, or NetDania, netdania.com. They also have historical data, and oh, there's just a lot of, if we go to charts, select an instrument, let's see the instruments that they have. Okay, so they have some stock indices as well, and CFDs. Let's see how far back some of this, and gold. Let's look at gold. And let's see how far back this goes. All right, so this is going to 1995. I'm not sure what I would need to do to get historical data going back further from that, but I am pretty sure that they have historical data going back further than that on this. All right, so that's NetDania, and also DailyFX is using TradingView. So if we click on charts, yeah. And if we click on the monthly, this goes back to 1972. And this is TradingView charts. All right. All good so far? Now, I must say that I'm very impressed with some of your wave counts. In the forum. So if we go to the forum, Elliott Wave Trends, I think there was something, now where is it? Okay, this is a very long thread, and there are some questions here that I just want to address. So let's just start from the beginning. We won't go through everything, but Barnabas, you have a few good questions. I've made attempts to determine end of trend using channeling technique, not sure of the application, if the application of the methodology, particularly when wave 5 is not complete yet, as well as how to proceed with determining the end of internal subwave 5 of 5. So you brought up a good point. You're not going to be able to calculate the subwave 5 from the daily chart. You're going to have to go down a time frame or two. So you'll have to go down to the 4-hour chart to see the 5-wave sequence. And the reason is you can't see all the subwaves on the daily chart. So you can see the subwaves of this 5-wave sequence, but you're not going to be able to see the subwaves of the wave 5. But this is very, very nice channeling of this 5-wave sequence. So that's number one. Definitely go to a lower time frame, a 4-hour chart, to determine the potential end of internal subwave 5. Okay. Now, the next question, I'm not sure if, let's just see. Okay, let's see what this is. Exploring further the daily chart above into a 4-hour chart provides the following analytical picture. Nonetheless, I'm not very confident because I ended up labeling waves A and B in yellow instead of green. Okay, the reason is on a daily chart, I was not very clear on labeling waves A and B. Thus, on a 4-hour chart, I was convinced that I've seen them. So is it correct to label wave A and B using the daily chart classification after identifying them on a 4-hour chart? Well, sure. You can go down and look at the 4-hour chart and identify them as you've seen. You can see the subwaves better on the 4-hour chart. And then I don't know if you have to go back to the daily chart because the wave count will automatically be there on the daily chart, right? Or maybe it won't. Yeah, it should be there on the daily chart if you then move to the daily time frame. Now, then Marius says, I was doing my homework on the same pair as yours and got stuck. Actually, we both had a similar approach, but I think there is invalidation in our counts. All right, I'm not, I didn't go through to find the invalidation on this. I didn't go through this carefully. I was looking at other wave counts and I can't really find them now. So I see that you've continued to speak to one another, and I don't know if, yeah, I mean, I was really looking at another pair, I think, that I wanted to comment on. Right, okay. I see that, yeah. Honestly, I still have a problem with corrective waves, the basic zigzag, flattened triangles and their combinations, WXY and WXYXZ. Jody emphasized on counting the number of waves before labeling WXYXZ. Still struggling to grasp. Right, because when we use a WXY instead of an ABC, it means that an A has 5 waves and a W has 3 waves. So you will notice if you've been watching Juan and if you've watched him for long enough, he has an awful lot of WXYs because whenever he sees a 3-wave move, he'll automatically label it a W rather than an A unless it's a flat correction, because a flat correction is 335, and then he can label it ABC. But if it's a zigzag, then it's a WX, then it's a W, because it's a 3-wave move in the W. And then, yes, a triangle will start out as 3 waves and then 3 waves, and you really don't know that it's a triangle until we get to the 3rd 3-wave sequence, and you can see that the waves are getting shorter and shorter, and that in fact will play out to be a triangle. And when I say let's keep counting the waves without counting them, what I mean by that is to use the wavy tunnel to count the waves. And we're going to start on the wavy tunnel today. So because some people don't really want to get caught up in the actual wave counting, but I see Marius and Barnabas, you guys are very, very proactive in understanding the wave counts. So for you, you're going to want to get your wave counts to a position where you understand what the next wave is going to be. But not everybody is going to be as precise as you guys are. So I want to encourage you to keep counting the waves as you've been doing, and continue to post in the forum, and we'll try to be more proactive now to really answer your questions and comment, and Juan as well. Okay. Also, Juan has an Elliott Wave Desk, Elliott Wave Ultimate class as part of the Elliott Wave Desk on Thursdays at 10:15. And in that class, he does take requests, and he will go through your specific wave counts and label waves that he doesn't do on a regular basis, on a daily basis. All right, I see there's a question. from Marius, but the triangle will still be considered as one single move despite having 5 subwaves inside. Oh yes, the triangle is complete on its own. And the triangle will only show up in the last position. So if we have a double correction, then the triangle will be the second correction. It won't be the first correction leading to another correction. It always shows up at the end. It can be a correction on its own, of course. It can be a wave 4 triangle, which leads to a wave 5. That's very common. Okay. And then there's another question here. Oanda uses TradingView data. Does it go back as well? Well, let's just have a look. Doesn't go back with everything, but I'll click on the euro. And no, the euro, this only goes back to 2003. Okay, so you can just see for yourselves. Now, another question that I saw on here had to do with Fibonacci extensions and Fibonacci relationships between the wave 5 and the wave 1. And I mentioned that Juan does calculate the wave 5. He uses the MotiveWave platform, and they had, with a click of a mouse, he can just calculate the wave 5 targets. They pretty well stick with what I have taught you, but they might add a few other ratios. Now, the other thing that I noticed in the forum is that I think it was you, Marius, who mentioned, or Fabian mentioned, a 1.272 wave 5 target off of the wave 3. So let me show you that. And that's something that we discuss when we discuss harmonics. Okay? Because it's a very common Fibonacci ratio for the wave 5 target. So we don't really discuss it during the Elliott wave portion, but as long as you brought it up, I'm going to confirm that it is a good target to look at as well. 1.13 to 1.272. Let me. No, I'm not going there. Hang on. Okay. Okay, and all I've done here is I've measured from wave 3 to wave 4, and it spits out wave 5 targets. This has gone up to 1.618 times. But 1.286 and 1.272 are sometimes common targets for the wave 5. Okay? So all I've done here on TradingView is I've taken the top of the wave 3 to the bottom of the wave 4 to get the extension, the wave 5 extension. That's what it's called. It's not using a 3-point Fibonacci tool. It's using the 2-point. It's the extension. Does everybody get this? But for Elliott wave analysis, the most common target is equality, wave 5 equality with wave 1. In this case, the wave 5 is much greater than the wave 1. And then you can use the other Fibonacci targets that we've spoken about. 0.618 times waves 1 to 3, 1.618 times the wave 1, etc. So you can use those as well. But this 1.272 target, 1.286 to 1.272, this is in favor these days because of the harmonic ratios. Okay. All right, so continue to post in the forum. After today, we're going to start to post wavy tunnel trades. So I'd like you to start to do that. And once we finish going through the wavy tunnel, we're going to bring Juan back, and he's going to go into wave counting in more detail. But I wanted to start with the wavy tunnel. Okay? Are there any other questions? I think I'm going to leave the forum right now. Okay. All right. What I'm going to show you right now is the wavy tunnel parameters. This is the original wavy tunnel, the wavy tunnel chart setup. So depending on the platform that you're using, you can certainly put this on yourselves, and we have the Motive Wave and the MT4 downloads, and we have video instructions for most of the other platforms. This is the original wavy tunnel, where we have the wave, which is the 34 EMA on the upper, the middle, and the lower, the high, the low, the close, and the low. That's how you put it on your charts. In purple, of medium thickness. That's how we've done it. And then we have the tunnel. We have the 144 EMA and the 169 EMA. And the filter is the 12 EMA in green. Okay, and the tunnel is in black if you're on a white background, and white if you're on a black background. So this is to keep it consistent in terms of colors. The Awesome Oscillator is the 534.5 Awesome Oscillator. It's a MACD histogram, and we use a 5 simple moving average on top of the oscillator. So the first few sessions are going to be just looking at the wavy tunnel structure without getting into the bungees. But we have changed our semaphores, and we have updated in red. These are the updated ones, and everything else has stayed the same for the purple pointer and the gray pointer. So called the Royal and the Noble pointer, for those of you that have the semaphores on your charts. We only have the semaphores on MT4 and Motive Wave at this point, and I'm looking into getting it on, I have to look into getting it on others. Okay, but we do have the bungee. You can put the bungees on all the trading platforms. So these are the latest parameters. We've only changed them once, and I'm going to have to post this in the, I'm pretty sure this is posted, but if it's not, I'll make sure to get this up there. But we aren't going to be discussing the bungee and the semaphores today or tomorrow, not until we discuss the wavy tunnel. Well, not until we get through the basic wavy tunnel setups. So let's start with the breakout trades. The wavy tunnel is one of the best Fibonacci and Elliott wave-based trading systems out there because it captures the market cycles. And this system can be traded on its own or in combination with other methods. I know that when some students come to us, they already have a method that they're using and they use both together. That's fine. Whatever works for you. The Wavy Tunnel Plus combines Elliott wave analysis with a methodology that elaborates on 4 trend trade setups and 2 end of trend trade setups. And today we're going to discuss the 4 trend trade setups, the breakout 1, 2, 3, and 4. This is the course outline for the Wavy Tunnel. So today we're doing modules 1 and 2, and tomorrow we'll do module 3. And on Thursday, we'll do trade management. And I think when we do trade management, we're also going to pick up module 4. We'll come back to module 4 in the Elliott Wave series because that is another trade management methodology. And then next week, we're going to continue on and introduce the bungees and the semaphores. And I'm going to bring Neil on next week. So these are this is your 8-wave Elliott wave setup, your 5-wave move, and your 3-wave move. It says currency pairs here. This is an old slide. It's any market moves in cycles. And actually, stocks work very, very well. The Wavy Tunnel works very, very well with the stock markets. Very, very well. Sometimes the currency markets are very, very choppy. And it's difficult to actually see what's going on because of the chop. You almost have to use something like a Renko bars, and we're going to have a session on that to filter out the noise and just filter out the candlesticks that just sort of confuse the picture. So we have the trend trades that we're going to discuss today, and we're not going to discuss the end of trend trades until tomorrow. So we're just focused on the 5-wave sequence. And I already showed you this. This is what the setup looks like. We have the wave. This is the Raggy wave. Raggy Horner came out with the book on the wave. And then the Vega, and she didn't even realize that the wave is so crucial in Elliott wave analysis. I actually sat down with her and had coffee with her, and I said, you know, we use your wave in our Wavy Tunnel setup because it really measures the wave cycles very, very well. And she was flattered. She laughed, and because she's not an Elliott wave person, but we see the value in using the 34 moving averages to capture the Elliott wave cycles. And then the Vegas tunnel is our longer term moving average. So way back when, the longer term moving averages that were used were the 50, the 100, and the 200, or the 100 and the 200. And then the shorter term moving averages were like the 20s, 20 and the 50. So what we've done is we're using Fibonacci moving averages. So the 34 is from the Fibonacci sequence. And the Vegas tunnel is also based on the Fibonacci sequence. And then, of course, we have the 12 EMA filter in green. So that hugs the data. And then we have our awesome oscillator. So this is the original Wavy Tunnel setup. And we have 4 trend following setups, which we're going to discuss today. The first one is the breakout 1. It kicks off the trend move when the wave crosses below or above the tunnel. So we call this the breakout 1. Now, the breakout 1 can be for a 3-wave correction, or it can be for a 5-wave sequence. And depending on how big this gap is, determines how steep how trend following the move is going to be. Sometimes we can just trade in a sideways market and just basically we can have a sideways market and we can have breakout ones going down, breakout ones going up, and the market is just moving in three-wave sequences. So we still need to do that top-down approach and look at the bigger cycle to see where we are in the wave count. We still need to do that. Okay? This is only an hourly chart of the British pound. This is in your course materials. So we don't really know the context, right? But we can trade the wavy tunnel by having a look at the daily chart, the weekly chart, just seeing the context, and then going down to the smaller time frames. So this is the breakout one trade. Now, I just want to show you something because the scanner is based off of the breakout one trade. If we go back to the scanner, okay, we have Forex stocks, CFDs, and cryptocurrencies, but I'll just click on Forex for now. The weekly, the daily, the 4 hour, the 1 hour, the 15 minute, the 5 minute, this is all based on the breakout one trade. Why? Because if price is, here, let me show you, let me just go back. If the wave is below the tunnel and the filter is below the wave and price is below the filter, then I'm calling this a downtrend. And it will show up as red on the scanner. So if we have the weekly all the way down to the 5 minute as red on the scanner, then we're in a downtrend. And what we will see is for all of these corrections, the smaller time frames will cycle up and down in this daily downtrend or weekly downtrend. So the 5 minute, the 15 minute, and perhaps the hourly will turn blue because we'll have breakout ones going up, and it will merely be cycling up in the overall downtrend. That's why it's important to look at the weekly and the daily chart to see, are we in a weekly downtrend or an uptrend, and how can we use the scanner to move in the direction of the trend? On the euro, the weekly is yellow, and when the scanner is yellow, it means that the wave is touching the tunnel. It's in the tunnel. When it's red, it means that the wave is completely below the tunnel. The third strand, the third wave, every wave, all three waves are below the tunnel. Then it's going to be red. But anything yellow means that the wave is touching the tunnel, or that the wave hasn't completely cleared the tunnel. Now, when it's dark yellow, in this case it's gold, it means that it has recently turned gold. When it's dark red, it has recently turned red. And when it's dark blue, it has recently turned blue. And we define the number of candles as recent underneath scanner under the instructions. So this is a very, very simple tool. It takes all of these time frames and it tells you whether we are in an uptrend or a downtrend on every single time frame. And when we discuss the scanner, we will talk about how we can use the scanner and how we can come up with trades using the scanner. So that's the breakout one. The breakout one kicks off the trend move. The breakout two is the pullback of the breakout one. It's like the wave two. It's like the wave two, right? Price comes down and then the market retraces and the wave comes back up to the tunnel before moving down again in a wave three. So the breakout one even though it wasn't designed as a wave 1, very often it's a wave 1. The breakout 2, very often it's a wave 2. And then the breakout 3 trades very often are taken off of the wave 3. And the breakout 4 trade very often is the wave 4. And when we define breakouts 1, 2, 3, and 4, we really didn't, honestly, I didn't have in mind that it was a wave 1, 2, 3, and 4. And it was only a couple years later that I realized, oh my, this is really happening, like that, you know, it's really following this order over and over and over again. Okay. And yes, the timestamp is Eastern. 12 bars of the 5-minute is equal to an hourly. Yes, that's correct. Yeah, because 5 times 12 is 60 minutes. Absolutely. So this is the wave 2, breakout 2. Then the breakout 3s will be every time that the price comes back into the wave, wave crosses the tunnel and price retraces back to the wave. Candles form below the wave and close below the 12 EMA. And then the breakout 4, wave 4 corrects to the tunnel after wave 3 ends. Candles form above the wave and close above the 12 EMA for the next move up. And this is where the awesome oscillator comes into play. Once we have we have divergence and we have a nice angle between the wave and the tunnel, then we would expect the mark to come back before moving up again. And okay, we're going to cover this tomorrow. Once the market does complete its 5-wave cycle and we do see divergence, then we have the price to wave with awesome oscillator divergence. Price to wave with awesome oscillator divergence. This is the end of trend trade. That's the PW. And then it's followed by the fill the gap trade. Okay. Now, for those of you who are astute, you will see that this PW fill the gap trade also occurs at the end of a wave 3 for the wave 4. Okay, it occurs after the wave 3 for a wave 4. And then very often we have the breakout 4 trade, which brings us down for a wave 5. That's why we need to look at the bigger time frames and see what the wave count is to see if in fact we've completed a wave 3 only, or if we've completed a waves 3, 4, and 5. Because if we've completed 3, 4, and 5, then we're not going to do just a PW fill the gap trade. We're going to do a PW fill the gap and then breakout 1, breakout 2, breakout 3, breakout 4 again to the upside. So these trades follow a progression. Breakout 1, 2, 3, 4, PW fill the gap, breakout 1, 2, 3, and 4. That's how it works. Is one of the requirements for the breakout 2 for price to touch the tunnel? It's not a requirement, it's a guideline. Okay, it's a guideline. Let's have a look and let's look at some breakout 2 trades in just a second. So these are the trades: breakout 1, 2, 3, and 4, and then the 2 end of trend trades, PW and fill the gap. Are there specific rules to follow with the wavy tunnel? Yes, the wavy tunnel trading is a system which has rules. It's designed to be used by following the rules without emotion. And we define the trade plan to avoid emotional trading. Most trades are unsuccessful when they don't have a trade plan or when they don't follow it. Okay? So learn the rules, follow the plan, practice, practice, practice to internalize the wavy tunnel setups. Now, I saw some trades being posted in the forum, and I loved the trade plans that were around it, around the Elliott wave counts. Loved it. So projecting the wave counts and then actually deciding when you were going to take the trade. I think, I'm not sure, but I think, Marius, you posted a pound trade. Was it a pound trade? I can't remember now. Yeah, I think so. And you posted the wave count, and then you posted your trade plan, and you stuck with your trade plan. You followed your trade plan, and you used the 3 profit tiers for trade management. The pound yen. Okay, I knew it was a pound pair. Yeah, that was great. So how should I get started to build confidence with this method? Find these trades over many days until you internalize the setup. Try to understand the theory behind the system. Take positions on a demo account until a track record of successful trades is established. Implement the method correctly. Do not guess where the market is headed until the setup takes you there. Do not think, just act in executing the trade. So don't overthink it, in other words. Think only at the end of the trading day or week when reviewing the setups. Because if we think too much, like we want these setups to become automatic. We do want to plan it out, so we do want to think in the analysis part of it. But then once we've done the thinking and we've laid out the trade plan, we just want to execute. And we document every trade with a screen capture so that we can review it at the end of the day or at the end of the week when we reviewed the trade setups. So let's try to understand the background behind each trend following breakout trade. And the background has to do with what we just discussed, the waves, the cycles, and learn how to trade each of the 4 setups by spotting the setup, triggering the entry, setting the stop loss, and setting profit targets. Continue picturing yourself riding the waves and cashing in on profits using the wavy tunnel for success. So this is the breakout 1 trade, and this is in one of our students, Thomas, did this graphic for us. It's great. I love it. And he has the clock face here, meaning that the clock face is between 12 and 2 o'clock. That's the angle that you want for a trend move. So breakout 1 wave crosses above or below the tunnel. In this case, it crosses above. Trend following breakout trade. Okay, so notice candles are forming above the 12 EMA filter. So price will cross the tunnel first, and then the filter, and then the wave. Always, that's price always moves first, right? So that's the difference between early entry and later entry on a breakout 1 trade. Some students, if they feel confident, they can enter on the candles. You can enter on a partial break once the waves are pointing up, or you can wait for a confirmed break. In this case, once the wave clears the tunnel completely, we've already moved up substantially. So this particular breakout 1 setup did not give us an opportunity, a retracement. Like they're not all of the breakout 1s are like this. But this was a very steep move, and it didn't give us an opportunity to really buy once the wave fully crossed the tunnel. So if you buy on the candle close, the first candle close with the wave pointed up, anticipating the breakout 1, then that's where you would enter, and you would set your stop below the wave. And then one way to take profit is to take profit when the candle closes through the 12 EMA filter with the trend line break. Here's your trend line, and here's your EMA filter. Your second would be when the candle closes on the opposite side of the filter with divergence. So here we have divergence, and you want to get out after you see divergence. And then the third would be when the candle closes through the wave. So this is one trade management approach. And on Thursday, we'll discuss the 3 profiteers, like we'll discuss other trade management approaches. So the breakout 1 trade, the wave crosses the tunnel. That's spotting the setup. Triggering the entry, this is an early entry, of course, is to place a stop buy above these candles or at the candle close. If the candles are closing above this long green candle, this is a 4-hour candle, so you could certainly buy at this candle close. So the filter is definitely pointing up and the wave is pointing up at that point. But this is definitely an early entry for the breakout 1 trade. Now, if you waited for the wave to completely cross the tunnel, then you would be getting in somewhere around here. Okay, so still it didn't take off completely like we had in that example. In the breakout 1 example that the student did. So early entry is basing the entry on price, making sure that the angle of the moving averages is moving up. And then confirmed entry is when the wave crosses completely. So when we use the scanner, the reason why we have the 5-minute down there is we have a confirmed entry when the wave completely crosses the tunnel. That's a nice early entry to get into the trend by looking at the breakout 1 on the smallest time frame on the scanner, the 5-minute. So even if we're trading the 4-hour, if we're pretty convinced that at the end of this move down, we are going to start to move up based on the wave counts, then we could use the 5-minute or the 15-minute breakout 1, and it would get us in probably at this level or better. And you can test this out yourselves. So the candle close would be up here, or a breakout of these candle highs would be here. And then you would set your stop loss below the wave. And where would you take your profits? Well, first take profit level would be you would draw a trend line and the candle closes below the filter with the trend line break. That's one idea. Okay? And when we discuss the 3 profiteers, we'll introduce another idea for taking profits, for setting your profit targets. Because not everybody is going to be by their computer and watch the charts until it breaks down below the filter with a trend line break. Now, if you're trading off of the daily chart, you could do that. And if you're trading off of a 4-hour chart, you can possibly do that as well. So you're checking the charts either every day or every 4 hours. The breakout 2 is when the wave sits above the tunnel in this case, it hugs the tunnel, and then the 34 EMA dramatically turns and leaves the tunnel behind. So the question is it one of the requirements for price to touch the tunnel? I don't think it's a requirement, but it's a nice entry when we have a nice steep wave 2 retracement and price comes back to the tunnel and the wave just touches the tunnel. Okay? It's just nice that when the wave comes back to the tunnel, price will touch the tunnel and we don't have such a gap between the wave and the tunnel. But it's not a rule, it's a guideline. And again, the entry stop would be at the close of the candle that crosses the tunnel and the filter. So right here, this is the candle close. So this is the breakout 2 trade. The wave hugs the tunnel, and price does come back up to the tunnel in this case. This is Apple, and this is the hourly chart. And then price starts to come back down. So this is spotting the setup. So the wave comes back up to the tunnel, and we know that we've looked at the bigger time frame, and we think Apple is going to do a bigger correction, and so therefore we're anticipating this move down. So the stop sell for the entry would be below these candles, and the stop loss would be above the wave, okay, or above the tunnel if it's close enough, or above this high price. It's your choice. Okay. As long as you use proper money management, it doesn't matter where you set the stop. You just don't want to risk more than 1 or 2% of your account. So if you set your stop above the high price, then your position size is going to be smaller than if you set your stop over here. Your position size will be a little bit bigger because your stop loss is smaller. And then taking profit, you draw your trend line, and then price goes above through the trend line break and the filter. This is just one way to take profits. Okay. Now I have 2 examples from former students. So this is on a black background, and the colors are all different. To each his own, I say. But you can see the breakout too, where the wave, which is dotted yellow, comes back to the tunnel, circled in white, and then the filter turns down. His notes say filter turns at 45 degrees, the wave bounces off the tunnel, enter at close, first candle past the filter, so that would be right here. And then he sees divergence here. This is called bar divergence. Bar divergence means that the histogram doesn't come all the way back up to the 0 line. If we went down to a smaller time frame, we would see proper divergence. We don't have we might not have between 100 and 140 candles in this 5-wave sequence to see that. And this is where he takes his profits when the candle closes above the filter. Okay? So a nice clean trade. You're in and you're out. Here's another example. Okay. This example was done by Anthony. Anthony really follows the wavy tunnel very precisely, and he's excellent with his 3 profiteers. And he actually runs we have a cryptocurrency room on Fridays. I think we just started back at that, and Anthony runs the cryptocurrency room. For those of you who are interested if you are interested in cryptocurrencies, let me know, and I'll make sure you get into the room. He's just very methodical, and he did this screenshot. So he's labeling this as the breakout 1 in the upper left, and then look what happens to the wave, the breakout 2, but he notes that the 34 EMA low, the low purple line, did not go above the 144 and the 169 EMA. So this is a good breakout 2 setup, because we like it when the wave touches the tunnel or approaches the tunnel but doesn't completely go above the tunnel. Second point in blue, candle close below the wave and filter is the confirmation of the breakout 2 setup and trend line break. So he's drawing a trend line here across the bottoms and looking for a breakdown below this trend line and below the a close below the filter. And then he sets his 3 profiteers, which we're going to learn about on Thursday, as 21 pips, 34 pips, and 55 pips. So breakout 1, then breakout 2 for wave 2, then a strong move that created a maximum peak in the awesome oscillator, strong impulse move down. So here's your awesome peak. So he decides to get out before the wave 3 turns into a wave 4. So you could also get out here, okay? Price would stop you out at 55 pips and when price closes above the filter with a trend line break. So this is the methodology that we were showing you. So he's showing both methods on this chart. So here we have the trend line break and price closing above the filter. Is it a good idea to get out after a wave 3? Well, when you see a maximum peak like this, and then you see the red turning to green histograms, well, you know you can't be selling it down here. That's for one. And if you are going to be selling it, you want to wait until this histogram bar comes back up to the 0 line for the wave 4. Well, that also suggests that if you're short, there's nothing wrong with taking your profits before we have the wave 4 pullback to the tunnel. So his note down here says maximum peak in awesome means wave 3. So we label this a wave 3. And what's before a wave 3? A wave 2 breakout 2 setup. So Anthony is not one of those guys who sits and labels the waves. He counts the waves using the wavy tunnel. So in his mind, this is a wave 3 because it peaks in the awesome oscillator. And this is a wave 2. Why? Because price comes back and the wave comes back to the tunnel and wave 3. And then the PW fill the gap would, once we learn that tomorrow, that's where your wave 4 comes in before a wave 5 down. Okay, managing the trade. 3 profiteers covered in Wavy Tunnel Pro Module 4. Take profit at 21 pips, move stop loss to break even. Take profit at 34 pips and move stop loss to 21 pips. Take profit at 55 pips and move stop to 34 pips. As soon as price starts to pass 55 pips, 60 to 70 pips higher, move stop loss to 55 pips. But in this case, he used 3 profiteers, 55, as his final. So I would love for you to label breakout 1, breakout 2, breakout 3, breakout 4 trades on charts in the forum. So that's what I would like you to find and post the breakout 1, 2, 3, and 4 in the forum. Now you can have your wave counts on the chart and show how the breakout trades correspond to the wave counts. And if you don't, that's fine too. So that's what I'd like you to start to do. So let's move on to breakout 3 now. On this chart, we have breakout 2 and breakout 3. We've discussed breakout 2, and the breakout 3 trades are bounces off the wave. That's what they are. Breakout 3, price bounces off the wave, a brief counter trend correction. Price dramatically turns and leaves the wave behind. So these are all opportunities to buy. All opportunities to buy. And notice the awesome oscillator, it does keep making higher highs. And then we have bar divergence here, and he's labeled this a 3, 4, 5. So take profit 1 when the candle closes through the 12 EMA filter. With the trend line break. So take profits 1, 2, and 3 are pretty well at the same point, he's saying over here. So let's look at an example. Oh, and this is the same. These are the breakout, the breakout 3 trade plans. Now, sometimes, look at this. Price is above the filter, so it's not touching the wave. If you went down to a smaller time frame, then you would see the breakout 3 trades into the wave. And you might feel more comfortable that way rather than buying at the filter. Okay, so you could go down a time frame to see the breakout 3 trades into the wave. And this is a nice little point here. It keeps you in the trade. You can also buy here, yeah, or on the smaller time frame at the wave. Stop buying when you see divergence. That's one way of doing it. Okay, so you keep buying it until you see divergence. And when we learn about the failed snapback with the bungees, you keep buying until you see a failed snapback. We're going to discuss that next week. So that adds another layer of confirmation that the trend has stopped when we get into the bungee. But before we get into the bungee, all we have to go on is divergence in the awesome oscillator or a 1, 2, 3 reversal at the top of the move. And a 1, 2, 3 reversal is actually a failed snapback. So these are all breakout 3 trades, price going back into the wave, spotting the setup. Price bounces off the wave or the tunnel at significant resistance. Now this is sloppy, right? This is pretty sloppy. This price action is pretty sloppy. So in a nice steep trend, price will bounce into the wave and then continue with the trend. But this is a little bit sloppy, so we see spikes to the tunnel. That happens as well. But let's see triggering the entry. So the price in the first example, the price moves into the wave, and then once it comes back down through the wave, we can stop sell. And then down here as well, we let it do its thing into the wave, and then we stop sell below it. We let it do its thing, and we stop sell below it. Okay, so that we avoid this messy price action. We let it do its thing, and we stop sell below it. And we set our stop loss, well, above the price high. That's where we set it. Okay, because we're selling on a breakdown. So we can set the stop above the price high. And where do we take our profits? Well, one way that we showed was to wait for price to go back above the filter. So in this case, we'd get out here, we'd get out here, we'd get out here. Or we could use the 3 profiteers, and we don't need to enter, every time price goes into the wave. It depends if we're a swing trader or a day trader or a momentum trader. If we're a momentum trader, and well, this is the hourly, let's say this is a 5-minute chart, we're definitely going to do something like this. Like, let's say it's a 15-minute chart. We're going to do something like this. We want to capture small pips if we're a momentum trader. If we're a swing trader, then we have to manage our stop losses. We might want to use the 3 profiteers and set our potential target based on a higher time frame, maybe a Fibonacci extension. And then, as we will learn on Thursday, we will learn how to set our 3 profit targets and move our stops accordingly. So that's the breakout 3. Now the breakout 4. The wave crosses above or below the tunnel. That's our breakout 1. And the conservative entry point is price bounces off the tunnel in wave 4 fashion in the same direction as the initial breakout point, which is the new trend. So tunnel provides significant support or resistance for price. Candles should be forming outside of the 12 EMA. Watch the angle of the 12 EMA. Okay, what do we mean by this? All right, this is your little cheat sheet for the breakout 4, where price goes all the way back to the tunnel. And entry, sell stop, this is early at candle close of reversal candle. So we're selling below these candle lows. Okay, there are 4 candles. He's noting that there are 4 reversal candles here. Okay, and the optimal angle of the EMAs in a downtrend is between 4 and 6 o'clock. Notice the steep EMA angles, and he set some take profit levels. This is very steep, and actually he's setting this trend line and he's saying to take profits above this filter. Okay, but what actually happens here, yeah, that's a good profit taking level, because then price comes back up and it comes down again. So if you use the 3 profiteers, then you can potentially hold this a little bit longer. If you're a swing trader, if you're a day trader or a momentum trader, you're most certainly going to be getting out on a trend line break and a break of the filter. So this is our breakout 3 price action, and then price comes back to the wave. The breakout 4 trade looks very similar to the breakout 2 trade in terms of the wave coming back to the tunnel. But what you don't have for the breakout 2 is you don't have the awesome oscillator. Like, you can't really see the peak here. I guess it would be over here. You don't see a wave 3 peak because the beginning of the move is just starting for the breakout 2. When you see divergence, then you call it a breakout 4, because we've completed waves 3, 4, and 5 of the wave 3. We're doing a wave 4, and then we would move up for a new high for the wave 5. So this is what we want to see. We want to see a steep wave and then coming together to the tunnel for the breakout 4 trade. So this is spotting the setup. And we can place a stop buy off of these candlestick highs, or we can buy at the candle close, this candle close. This is also a 1, 2, 3 reversal, buying through these candle highs. And we set the stop loss below the lows. And the profit target, well, we're consistent in showing the trend line break and a move back down through the filter, or using the 3 profiteers. So there's a question. Barnabas is asking, in setting the 3 profiteers, does the stop loss level move automatically? Yeah, that's a good question. You can have it move automatically. We are going to discuss this on Thursday, but I'll just tell you that for the 3 profiteers, to keep it simple, let's say you're looking for 34 pips, 55, and 89 pips. Now, you have to make sure that this makes sense, but usually we set the stop loss at the same level as the first profit target. So let's say we set a 34 pip stop loss, and it doesn't have to be that way. This is just for simplicity's sake. And we set a trailing stop of 34 pips. Then once the 34 pips first profit target is taken, the stop automatically moves to break even for the others. Automatically. And when your 55 pip target is taken, you'll still have a 34 pip stop loss, trailing stop, so it's not going to shift once the 55 pips are taken. It will shift once the market moves to 68 pips. You see? Because that's 34 plus 34 is 68. And then the stop will move from break even, from 0 to plus 34 pips. So you can only set a trailing stop once, unless you go back and you modify it. So you set the trailing stop at the first profit target, and then it moves to break even after you take your first profit of 34 pips. I hope that explains it. Okay, so this is the breakout 4 trade. Can you see the resemblance between a wave 4 and a breakout 4 and a wave 3 being the prior peak? Can you see that? The best way to get the hang of these trades is to just look for them over and over again, and you could actually use Strategy Tester and MT4, and depending on the trading platform that you have, you can go back through historical data and look for just a bunch of breakout ones, just do breakout ones and just see, okay, what happens with the breakout ones? You know, what if we took a breakout 1 trade, how much profit is there? You can back test. So on the breakout trades, the steeper the slope of the wave and the 12 EMA, the higher the probability the trade will be. Meaning, you want to see a steep slope because then the trend is going to be a nice trend. Look for the wave and the 12 EMA to be in the 12 to 2 o'clock position in an uptrend, and the 4 to 6 o'clock position in the downtrend. That's on a clock face. When the trend is steep, use the 12 EMA filter to exit positions. When the trend is not as steep, you can move to the wave. And try to understand where the market is in the wave count. That will help tremendously. There are a few different profit-taking exit strategies. Observe the system over a period of time or backtest to become comfortable with the entry, the profit-taking, and the stop loss. It's important not to give back all the profits made. It's also important to try to ride the wave as far as you can for profits. In Module 4, we will learn more about profit-taking, risk management, and money management. Wavy tunnel trading is a system which has rules. It is designed to be used by following the rules without emotion. To help avoid emotional trading, use entry orders on the 1-hour charts and don't look at the trade except to move your stop loss. Only take trades on the impulse waves. They represent about 30% of the market movement and are the strongest and most consistent moves. Within a corrective wave, the impulsive waves are the A and the C waves. Now, wavy tunnel trading works best on a trend move, right? The breakout 1, the breakout 2, the breakout 3, 4. But you can also trade sideways markets. Let's say you're looking at the daily chart, and the daily chart looks something like this, and it's trading sideways. And you could literally draw channel lines. You can trade within these moves, wavy tunnel style, by moving down to a smaller time frame. So you can trade like the trend moves by moving down to a smaller time frame. Or you could trade at market tops and market bottoms on the daily. But, and this would be the same thing as our PW fill the gap trade. So by looking at a long-term sideways market, you're going to want to get in at market tops and bottoms and get in on a PW fill the gap trade on the market top or the market bottom, and then follow it wavy tunnel style to the next wave peak. Some observations. When the wave and the tunnel come together on the one-day chart, then a big move is about to happen. Look for a break. So that would be like the breakout 2 trade or the breakout 1 trade. And when the wave and the tunnel are separating, then the current wave is likely to be an impulse wave. So when you see the wave separating from the tunnel, that's when all of your wavy tunnel trades are going to kick in. When the wave and the tunnel are coming together, then the current wave is likely to be a corrective wave. So that would be the breakout 2 or the breakout 4. The wave is coming back to the tunnel. Breakout 2, breakout 4. The closer the EMA 12 to the tunnel, the more likely the break will be sustainable. What does that mean exactly? We want the averages to be close together. Like we don't want the 12 to be totally on its own with price. We want the market to give itself time to start the trend. And the breakout trade is often confirmed by a trend line break. So what we mean by that, like a breakout 3 trade, so what we mean by that is if we're in breakout 3 mode, we can still draw our trend lines wherever we are. Like we can draw our trend lines like this, right? And look for a break. And then when we get to the end here, we would draw our trend line down the whole thing. So I'm really big on drawing trend lines. So get into the habit of drawing trend lines. Okay. Now let's just go back to one second. Oh, okay. I thought I had the course website, the course website up. I don't, I guess. Let me just see if I can get it up quickly. So just a reminder, under live webinars, this is the schedule. And if you would like to get a 2-week free trial of MotiveWave, please use our link because we will provide you then with the MotiveWave wavy tunnel setup for your MotiveWave if you do get it. So please use our link to download your 2-week trial for MotiveWave if you wish to try it. So it's right here. So this is the schedule, and in the introductory sessions, we have already posted the course overview, the trading platform review, the forum instructions, and these were last week's webinars. Okay, session 1 and session 2. Today, this video will be posted under Wavy Tunnel Pro, number 1, Trend Following Trades, modules 1 and 2. And these are the Wavy Tunnel webinars that we're going to be doing over the next couple of weeks. Okay? So tomorrow we're going to discuss the end of trend trades. On Thursday, we'll discuss trade management and top-down approach. Next Monday, we'll discuss the bungee, the semaphores, and more on divergence. And next Tuesday, I'm going to bring Neil on, and he's going to discuss some high probability wavy tunnel setups. It's really another layer to what we've been doing. And then on Thursday, we'll discuss the Elliott wave scanner and wavy tunnel connection, and then back testing and trade plans, and we'll go from there. So that concludes today's session. And I want to thank you all for being here, and please continue to post in the forum. It's for your benefit as well as our benefit, and let's keep this forum active. So thank you very much, everybody, and have a great week. See you tomorrow.